Now we'd like to take a look at the concept of aggregate costs. And by aggregate, all we mean is added together. So we want to take a look at three related but separate concepts of fixed costs, variable costs, and total costs. Fixed costs we are going to define as those costs that neither increase nor decrease as production increases or decreases. So you can notice here that as we add more workers and we mow more lawns, the fixed costs are remaining the same in each time period. These are costs that might be associated with rent or repayment of a bank loan or property taxes. None of those costs that do occur on a periodic basis are related to the production of the good. Variable costs, on the other hand, are directly related to the production of the good, such that when zero goods are produced, there are no variable costs incurred. You can imagine the wages of workers as a variable cost. If you have zero workers that make zero lawns, you've got zero wage costs for those workers. You can imagine our landscaping business then that we also, in addition to wage costs, have to have some sort of cost for the number of mowed lawns. So for example, the gasoline that's used in the lawnmower per lawn. So our variable cost function in this situation has been defined as $100 in wages for each worker plus $5 for gas expenses or maintenance on the lawnmowers for each mowed lawn. So that when we have one worker mowing 10 lawns, we have to pay that one worker $100. 10 lawns at $5 a piece is $50, so 100 plus 50 is $150 in variable costs. When we have two workers, we've got to pay $200 in wages, plus 25 times 5 is 125, meaning $325 in variable costs. Lastly, we can simply see our total costs are the addition of fixed plus variable costs. So this is a very important thing to note, that fixed cost plus variable cost equals total cost. And all we've done here then is indicate at any level you can see $100 in fixed cost plus $600 in variable cost equals $700 in total costs. And that will be a very useful association that we're going to be able to employ in many situations throughout. If we were to graph these three columns of fixed cost, variable cost, and total cost, we get a very distinctive looking graph, probably one of the easiest ones that we'll see all year. It's very easy to note. The costs that stay the same are obviously going to be our fixed costs, no matter how many goods are produced. It's worth noting that the x-axis in this situation is not the number of workers, but rather the number of lawns that are produced. The second thing to note here is that if you take any vertical distance between the variable cost and the total cost, we know that the length of both of those lines is going to be equal to $100. Why do we know that? Because fixed costs are what separate variable costs from total cost. So that fixed costs and total costs start at the same point, but at every point thereafter, the total cost is greater than the variable cost by exactly the amount of the fixed cost. So that these two lines are parallel. Variable costs and total costs are parallel. They'll never touch, they'll never get closer, because they will always be separated by the fixed costs, which will of course remain constant throughout their production.